Morning, Cam. How are you?
Yeah, good, thanks. Hi, Chris. Hey, everyone. Thanks for joining in again. Hope you're getting a lot of great content out of this. And I think the main reason also, Chris, is why we do these is to give people like a bit of a macro perspective of what could happen um, into the week. And also another big reminder is with trading is like we work with probabilities, we work with odds, not with absolutes. So when we talk about the macro perspective, don't be too drawn into that bias because majority of us are short-term traders. So we
Yeah.
trade very small time frames. So once again, don't get too caught up with the bias. As a day trader, I think one of the key traits of a day trader is to know when a trade is wrong, when you are on the wrong side. So you need to have that flexibility of thought and mind. That it's good to have a bias going in, had to have some pre-trade planning and preparation to go into the week. And, we generally start at the start of the week with a top-down approach. So we start with the larger charts and then we work down to the lower time frames and where we really narrow in on our trade opportunities.
Yeah. Just give you an overall picture, as you say, give you a good picture of what potentially might happen, what news might affect it, and when, and
Yeah.
plan around it.
Yeah, absolutely. So, brought up a good point about news. So news is typically the fundamental aspect around the trading. And then you have the technical aspect. So we're primarily technical traders, but we do need to respect that fundamental stuff as well. And the more you get into trading, the more you want to learn, the more you want to understand about correlations between markets and those sorts of relationships of how news affects markets and prices and market reactions and things like that.
Yeah.
So, you don't need to be a know-it-all, but it's good to have an understanding. And there's great information out there, and that's the great thing about the financial markets is it's always changing. It's exciting industry to be in, and there's so much interest in it.
Yeah.
So look, if you've got the time to afford to do some study about correlations and different markets, there's some great information out there. Like even the information I'm bringing you here, it can give you a bit of a start to some of the subject matter if you want to learn a little bit more about, say for instance, I talk about, the correlation between the S&P and the NASDAQ. You can delve in deeper on
Yeah.
those things, or gold, and oil and those sorts of commodities and what drives those prices. So it's really interesting times at the moment, and
Yeah.
it's it's always exciting, and there's always opportunity. So
Yeah. I was going to say it all creates opportunity, doesn't it? No matter what's happening, there's an opportunity somewhere.
absolutely, and there's so many markets, that you can specialize in and get really good at understanding those markets. So, and that's, you're always learning in this industry. You never, like I said, you never know it all.
No.
There's always things happening and changing, and the more you can read, you know, not necessarily reading the mainstream headlines, not getting caught up in the mainstream headlines like we spoke about last week, but understanding a lot more around combining the fundamentals with the technicals, because
Yeah.
the technicals generally give you an understanding of what should happen in the price movement. Does it happen all the time? No. Obviously, fundamentals can throw things out, right? Like a shock news announcement can really throw things out. Um, but knowing where those areas are, where there's going to be a potential change in direction, is interesting. So let's get into the market, shall we, and talk about on the macro level what's happening. So let me start with the larger charts, and I'll start with S&P 500, and I'll just share the screen. All right. Okay, can you see that?
Yep.
So I'll just bring up my pointer tool. So this is this major trend line. Now, if this is the daily chart, and I'm just looking at the regular trading hours data here. So what's been happening in the US cash market, this is what this chart represents. So basically, the market looks very, very bullish. It's, we had this sell down here at the end of April and the start of May. The market was in this sideways trading range. So that was last week. We were looking to see if the market could come back into this range, and it didn't. It actually kept gapping up. So Monday actually gapped up. Tuesday hit into this trend line here, and we stalled at the trend line. And then on Thursday, we got above the trend line. And then Friday closed fairly weak, but we're still making higher highs. And another interesting point to make as well is look at these gaps. All right. Now, typically when market's making gaps like this, it's a very bullish sign. And when the market, when it finally decides to rebalance, and because markets are all about structure, and good structure is when these areas get filled out. So when the market retraces back into these areas and fill them, that's what you'd expect the market would typically normally do in terms of the market was in good structure. So these gaps have still not been filled. So this market is looking very, very bullish still. And I think because these gaps have not been filled, this market is what you'd call out of balance. And this is when you see out of balance markets. This is, if you see that trend continue, this is where you'll get some nice price movement in a direction. So on the macro scale, it looks to me like we're looking to test these all-time highs again. Now that's an all-time high that was made in the extended hours, so obviously in Asia or European hours. But that price, what is that price? All-time highs are up around about 5,333, around about that. So the market looks like it's trying to test that area. Also, by the way, last week was a fairly quiet week. We did mention the week before, last week, that there was not a lot of big financial news. We didn't have a lot of big players reporting either. A lot of the major tech players have reported, and then the market has, there wasn't a huge amount of fluctuation in price action last week. So all-time highs on the ES are looking fairly strong, and we've broken out of that bearish trend line there that we've closed above that. So that's a fairly bullish sign. Now, we'll go into what news is coming up this week as well, because news is really the only thing that I think could derail this move to the high side, is if news comes out and it's not what the market is expecting. Now let's look at its best friend, the NASDAQ. So if you're new to the channel, these are the two primary markets that we trade, is these index markets. So the S&P 500, which the code is the ES, the E-mini S&P 500, and then there's the NASDAQ, or the NDX, which is the top 100 tech stocks. So they're highly correlated. So where are we at here on the NASDAQ? Well, we have broken that trend line. We've got our all-time highs up here around 18,694, around that price there. 18,700 actually is the all-time high. Now, we're a little bit away from the all-time high. The S&P is definitely a little bit stronger at the moment. The S&P is held above this downwards trend line a little bit stronger than the NASDAQ. So the NASDAQ is not as strong at the moment, and the tech sector hasn't really been setting the world on fire. Recently, the recent earnings reports haven't been, super bullish like they were the last quarter. However, we do have NVIDIA coming out on the 22nd of May. So I think a lot of market participants are watching NVIDIA, because NVIDIA was so strong, the last report, and the market went ballistically bullish after those earnings reports came out with NVIDIA. So we'll see if NVIDIA are continuing their journey. So that'll be in a couple of weeks' time. We'll watch that. So 22nd of May will be a really important date because it had such an effect on the market last time. So I'd say it should do the same thing, I'd say, if it reports strong or weak. But so, yeah, NASDAQ is holding above this bearish trend line. It struggled at it a few times last week. There were some really good short-term sells off that level, off that trend line last week that I actually took advantage of, which was fun. So this is where these macro levels can be fairly powerful. They can give you some very good support and resistance levels to watch for. But once again, trading is all about odds, not about absolutes. So the odds that the market was going to turn here was high until it broke above and held. And we held above it on Thursday, and then Friday we gapped up and went to the high side. But once again, we closed fairly weakly on Friday, so on both those indexes. Let's have a look at the other markets as well. So oil. So this is the oil daily chart. So we spoke of oil found support at this major 50% on this range here. So oil is in a bit of a corrective phase, and it's in a balanced range. So this market has been pretty much balanced for well over a week now. So very important level for oil. We want to see the market break out of this balanced range, which is pretty much it's just snapping at the moment. Sorry guys, I'll just change the settings there. So that's kind of basically when the market's in balance is when we're just seeing overlapping daily bars or daily candles. So we've seen the market start to overlap through here. So this market was out of balance down here. So we broke out of this balanced range, and now we've gone from out of balance into balance. So, ideally, if you're trading, you either want to see the market with balance rules. Let's see this week, if the market comes back down to the 50%, you want to see the market get under the 50 and continue lower. You want to see continuation under the 50, or look for a fake out below the 50. So watch it break down, fail, and then go long. And you'll get a nice trade, I think, from around 76.90 upwards of, up around 80, which is quite a big move on oil. So watch oil, and vice versa. If the market can, reverse and continue to the high side, then watch for the break of that 79.81 around that $80 mark. If it can get above 80 and hold, then we could see this market reverse and continue and test the all-time highs again. Oh, not all-time highs. We're a long way away from the all-time highs, but the most recent highs were made back in April. So that's oil. Gold. Gold is... So I was listening to a report on the weekend about, where are we? And some of you guys may understand this term risk on or risk off. It's quite often, if you listen to the news, you'll hear the market analysts talk about all the markets in risk off or risk on. Basically, risk off just means you're expecting volatility, higher volatility, all right? Which means when there's risk off, just means that there's not so much tightness in the market, right? It just means there's a lot more free-flowing price action. And typically when the market's in a risk-off state, commodities like gold will really start to move in this risk-off environment, and that's what we're seeing right now. A lot of volatility in these commodity markets, especially obviously gold. So gold has broken out of this bearish trend line, and we're holding above that bearish trend line there. You can see how the market, a lot of the time last week, the market was sitting around that 50% of that trend channel. And then we found that actually level acted as support around about 2,300. So yeah, let's see if market can test those round numbers, those psychological numbers, 2,400. We've got a big liquidity zone up here. Market might be attracted into. So let's see if gold continue its push to the high side. Once again, on a larger macro scale, it is in a fairly balanced range, but we had a very strong bullish day on Thursday, and Friday was fairly quiet. But we'll see if we can get a continuation, and this market can break outside this downside trend line. So, look for, once again, if gold can get below this downside trend line, then we're probably back into the range. If you can hold above this level, then look for a test of 2,400 there. So that's gold. And Bitcoin. Bitcoin was fairly weak again last week. I just adjusted this trend line a little bit because we found that the market was finding balance around the 50, and we're struggling to get above the 50 of this trend channel. And you can see we failed up at the 50%, up around 66,000. So the market looked like it was showing some strength late last week, but on Monday looked like we tried to break out. I think the weekend was quite volatile, the weekend prior on Bitcoin. Yeah. But price, it seems to be struggling up around that 64,000 mark, and we're still holding above 60,000. So this market is still very much in the balance right now. A lot of pundits are accumulating down here. Apparently some of the bigger players or the bigger holders of Bitcoin are accumulating down at these prices. So, I probably in the next month or so, you probably expect to see Bitcoin breaking out and testing those highs again, up around 76,000, 70,000. Obviously, it needs to get through some levels of support first, or resistance, being 68,000 seems to be the key level it needs to get back above. Yeah. And then once it gets above then obviously you want to try and get above these highs back up here around 73, 74 would be the next level. So that's kind of in Bitcoin. So
they all have markets. I was going to say that they're all looking quite similar in the way. I think in the last 2 weeks we've talked about them sort of going sideways. As you say, they've been in like a 14-day range, but they're all now, there's just slight moves there, as you say, to just keep an eye on, long or short. They're just sort of potentially setting up for something. Yeah.
There's obviously going to be some, all-time highs. A lot of those markets are close to all-time highs, apart from oil. Oil's a little bit slower, but there's there's like this week, for instance, news I think is going to be big. So we've got let's have a look at Forex Factory. The Forex Factory up. So this week we've got last week we had a lot of public holidays in Europe as well, so market was pretty quiet as well in Europe.
A lot of central banks not really giving much information apart from nothing to see here.
Yeah. So this week, Tuesday, Chris, we've got core PPI in the US. That's Tuesday night at 10:30 p.m. Queensland time. We've got Chairman Powell speaking at 12 midnight on Tuesday night, so coming into Wednesday morning. Then we've got some European news on Wednesday night. Late Wednesday, 10:30 in the pre-market, the US pre-market, we've got CPI. So those inflation numbers are really important. That's where everyone seems to be focusing their attention at the moment, is interest rates, and what the Federal Reserve are commenting on. That seems to move the markets at the moment. So that's Tuesday night. Thursday night, we've got unemployment claims for the week, and a few FOMC speakers as well on Thursday night. So yeah, the main thing is that CPI news and the PPI news coming out this week. So just keep an eye on those headlines and watch how the market reacts from those news announcements. In terms of earnings reports, nothing much this week. Alibaba on the retail sector on Tuesday, Home Depot on Tuesday in the US, Cisco on Wednesday, Walmart on Thursday. So it seems to be a fairly big retail week. So a lot of that consumer staple, consumer discretionary type reporting this week. So that will obviously have some bearing on the S&P 500. Not so much on the tech index, but mainly on the S&P. And the S&P tends to go a lot stronger in this part of the property, the real estate cycle. We're in the back end of this real estate cycle, so S&P should be a bit more ahead of the game in terms of its appreciation in price. Typically, the tech index doesn't do as well in the second half of the real estate cycle. But I think we spoke last time that the tech stocks are making a big percentage of the NASDAQ of the S&P 500 these days. So there is those quite strong correlations. But as we looked before on the S&P 500 versus the NASDAQ chart, you can see that the S&P is a lot closer to its all-time high. NASDAQ is a little bit lagging at the moment. But so that's about it in terms of, I think, in conclusion this week, I think look for, a test of all-time highs. Obviously, we've got important news coming out. So we could see, once again, we're in a risk-off environment, so we could see some volatile price action and some very good opportunity in both directions. So it's just, just watching how, what's going to be the strongest direction, what's going to be the strongest trend, and watch for, any, I think, strong drives into support and resistance, and look for a nice push away from those areas. So
fantastic.
Particularly those first attempts into those areas, you could get some nice short-term opportunities. But I'll be looking for indexes to show a strong move forward this week early in the market. Monday, you want to see a nice open. The market's open now already below the gap. So if this market gets back above the gap, then we could potentially in for a nice little trend to the upside this week, or to start the day in Asia.
Excellent.
But that's about it, I think, guys. Hope you got some nice ideas out of that, and next week looking forward to reviewing the week to see how that news affected the market movement, and let's see if this risk-off environment continues. Let's see if gold can continue its movement up, and see what oil does as well. Oil's fairly balanced, but I think it's been pretty quiet in the Middle East at the moment. So the oil price is just not really doing a great deal.
It'll be an interesting week ahead. Thank you as always, Cam. Some great insights.
Yeah, thanks, guys. Enjoy, happy trading, and remember, manage that risk. That's all you can really do. And remember, trading's all about probabilities, and there's you can't rely on absolutes in trading. So you've got to have your plan, be flexible, and really stick to what you think the market's going to do, and be look for those high conviction trades, and don't second guess yourself. Just back yourself and manage the risk. That's all you can do.
Yeah.
All right. Thanks, Chris.
Thanks, Cam. See you next week.
Bye, guys.